Howdy there, folks. Welcome in. This is just the start, okay? Few videos to react to for me in this one here today, folks. This one I actually thought was really important. It's actually from 2 days ago, but I really want to react to this one with you guys here. The impact of higher rates will be felt in the quarters ahead. So I want to hear what JP Morgan has to say in regards to this, kind of share my perspectives on this one, right? Just kind of the start of the feeling around this, right? Gene Munster believes this is just the start of a new opportunity for Meta. So I want to hear what he has to say in regards to this and kind of share my perspective. This is from a few hours ago, and I actually got to see this live. I had on Fast Money while I was doing some work earlier, and I actually watched this clip live, so I'll share my perspective there. And then I want to hear Josh Brown talk about Microsoft, a few of the other big techs, and kind of share some perspectives in regards to that one here today, folks. I appreciate everybody joining me as always. Thanks so much. 26,000 and, oh man, are we at 26,100 subscribers? Something like that. So I appreciate everybody that subscribed to the channel. Thanks so much for being here. Glad you guys enjoy it. Also, if you're looking to get on our Patreon, make sure you do that ASAP. That will be pinned comment down there. Alrighty, guys, let's get into this.
500 set to report earnings this week. We want to bring in Gabriela Santos, who is global market strategist at JP Morgan Asset Management. Gabriela, you say that the economy is weaker than it seems from the numbers most people are looking at.
I do think now that we're in this world where we've unwound the zero interest rate policy, the liquidity flush environment we had for 15 years, there's actually a lot of dispersion happening beneath the surface. And that's true when it comes to the economy, earnings, between sectors and between asset classes and regions. When we look at the economy, on Thursday we'll get first quarter GDP. We do expect it to look really, really strong, over 2.5%. We'll see some weakness in the first areas that were impacted by higher rates, manufacturing, housing. We'll see some resilience within services and consumption for now, but we do think the rolling impact of higher rates should be felt in the quarters ahead, and specifically through a weakening in the jobs market, which ultimately impacts consumption and services. So really kind of a high watermark for the economy at the moment.
Which means what for the markets?
So I think it's interesting that the discussion for the markets is the opposite, right? That the first quarter earnings season might mark a low for earnings. And to us, that doesn't quite make sense if we're describing an environment where the economy itself is at its peak strength in the first quarter, and we see some deceleration and perhaps even contraction.
All right, pushing back against that point, okay? Two thought processes come to my mind when I think about this, okay? First one is consumer sentiment been obviously lowest we've ever seen in history, actually in 2022, right? We have seen strengthening consumer sentiment. We have had, 24 months of real wages go down. Let's imagine a scenario where, real wages actually go positive. Like, I'm not going to get too excited about that, but at some point this trend is going to break. At some point real wages aren't going to keep going down. They've been going down and down and down. At some point that reverses. That will be healthy for obviously the consumer and the market in general, right? Whenever that happens. At some point the Fed's going to obviously cut rates here. And the other component that definitely comes to mind is the massive cost cutting from corporate America that's going on right now as we speak, right? And is also going to go on in the second quarter. And so the third quarter and fourth quarter, I think, are going to be very good quarters from corporate America. I think you're going to see some of the strongest year-over-year EPS growth and net income growth, especially from a lot of the most important stocks that matter to the market. I think you're going to see some of the most impressive growth we've seen from those companies since 2021. So do keep that in mind, folks, and that's what's in store. And I think that's why the market has been, honestly, kind of rallying over this past 6 months, because I believe the market believes what I believe in regards to that, okay?
Ahead. So I think that's a bit why so far we've only had 20% of companies reporting on earnings, but we've had some pretty muted reaction to earnings beats, because I think there's some uncertainty about whether that consensus really makes sense or whether we're a bit too optimistic about earnings ahead, specifically at the top line as you see some weakening in the economy, but also margins. What kind of margins make sense as we're seeing some normalization in pricing ability of companies.
So when we hear from companies that say that they expect to make up most of the numbers, or if they've had a miss for these quarters, they expect to make it up in the second half of the year, you don't necessarily buy what they're selling?
I think it very much depends on the company, the subsector, and the sector itself. But in general, we would be skeptical of that message. And I think especially if you look ahead at the second half of the year, there's still a lot of strength embedded in those earnings estimates, an expectation that you'll go back to positive earnings growth in the third quarter and double-digit earnings growth in the fourth quarter and in 2024. We're not expecting any kind of crisis in terms of earnings contraction. It's just speaking to some downside here in the U.S. And I think the dispersion is upside expected around the world. And here, speaking of Europe and emerging Asia as well, where we see upside to those earnings estimates.
I mean, I've just been thinking through companies we heard from last week. You had AT&T and American Express saying that they expected to see better profitability in the second half of the year, better return to cash flow. You had a company like Procter & Gamble, which really knocked things out of the park, but they did that with the help of 10% price increases that went through. Will they be able to continue price increases? How do you break it down? How do you figure out what you like and what you don't?
I think that's the issue we're having with some of those earnings estimates. Part of it is uncertainty about the real economy and the macro momentum in the second half of the year. But more than that, it's just having some difficulty figuring out what a normalized pricing environment is. And that includes not just your more discretionary-oriented companies, but even some of your staples. What is a more normalized pricing environment?
Okay, before we get into the Gene Munster Meta one here, okay, I'll take you through big tech here for a moment. And I'll tell you if I'm confident these big tech companies, I'm going to go individual by individual, if I'm confident that they are going to do well, like worse than last year in the third quarter and fourth quarter in terms of net income, EPS, or better, okay? So Tesla, I would expect them to have maybe a flattish 3Q, 4Q profitability-wise versus last year. Adobe, I expect slightly stronger. Intuit, slightly stronger. Netflix, slightly stronger. Shopify, quite a bit stronger. Google, McDougal, actually quite a bit stronger. Apple, I'm a little concerned they might have slightly worse profitability 3Q, 4Q versus last year. So much is going to be dependent upon iPhone 15. It's a big hit or whatnot. Uber is going to have better profitability in 3Q, 4Q than this past year, in my opinion. Same thing with PayPal. Same thing with Salesforce. Intel, I'm not very confident in that, okay? Palo Alto Networks, I don't really have an opinion there. Meta, absolutely, way stronger 3Q, 4Q I'm expecting this year versus their last year numbers in 3Q, 4Q. Amazon, same exact situation, expecting a much stronger 3Q, 4Q when it comes to their net income, their earnings per share versus last year. AMD, I think, is a wild card. NVIDIA is a wild card, although AI is ramping up so fast that could actually, be positive there. MU is a wild card. Microsoft, yes, I'm expecting a stronger 3Q and 4Q profitability-wise versus last year. And Snowflake, I think, is a bit of a wild card there, okay? So nonetheless, if I'm accurate on those predictions, right, I mean, you tell me where the market's going. You tell me where the market's going to go over the next 6 to 9 months.
Asset management. Wow, Gene, what is stock reaction? What are the things that you want to know on this call?
I want to actually hear about WhatsApp. It hasn't hit the trajectory of the traders here, but this is a massive asset. They're starting to do direct messaging for businesses to consumers. And as an investor in Meta, this is an opportunity that I think could add 10, 15% to the overall revenue in the next few years. So that's one piece I want to focus in. I think that's an area that people are not going to be talking much about. Also, as long-term investors, I want to just kind of continue to hear their views on their trajectory of their DAUs and just want to underscore. Karen mentioned a number. I had a fractionally different number on the DAU growth. Just point this out. I think it was 4% year over year. That's up from 3.7% in the December quarter and 2.5% and 1% or 2% back in June of last year. 4 consecutive quarters of increasing DAU growth. I know those are small numbers, but the base is massive, 2 billion. That's 35% of the active internet users are on a Meta product every day. And that is addictive products. And those maintaining that, at the end of the day, this whole story, what holds it all together is those DAU numbers. And you do hit a top end at some point when you get all the people. But that's another piece I want to kind of dial into. And it'll be fun to do. Another thing I'll be doing is the Metaverse Count. We basically disappeared from their December earnings call. We'll see how often Mark talks about it tonight.
So what are the magic words? Are AI and what else are and efficiency? Is that what you're looking for?
Yeah,
or is that sort of played out as well?
AI is always that don't want to overlook that toy department because they'll be talking about that and creating content that the different Reels users will use to create content. That'll definitely be something that focuses will be a topic on the call. As far as the other key factors here, the efficiency. Just one thought on that as well. I'm sure there's going to be a lot of talk on this. I think we got one more quarter where Wall Street's going to be focusing on this. Our view is that that's going to largely be.
Before I go further, this kind of makes me a little sad, I guess you can say, in regards to this. Okay, so I released my Meta video, a few hours ago on the main channel, right? And that video was a 10 of 10, meaning it's the least viewed video I put out in the last 10 videos. Why is that? It's because most people don't care about Meta stock, unfortunately. Retail doesn't really care about Meta stock. And it's sad because this is such an extraordinary opportunity. It's going to continue to be such an extraordinary opportunity, but retail hasn't taken this one serious. And they've missed out on ridiculous gains, right? I mean, this was a stock that, back in October, 7 months ago, was under $90 a share. And it's at $230 now. It's on its way to, this is going to be a $500-600 stock over the next few years with very little risk in it, very little risk. And I'm just, I don't think most people are going to participate in this one from the retail side, and that's unfortunate because they've missed out on so much money already, and they're going to miss out on so much more money over the next few years. And, it is what it is. It's just like, it's been such an easy money stock. It's going to be such an easy money stock over the next few years. But unfortunately, it's just, a lot of people, it's not exciting, I guess you can say, right? It's not exciting like some other companies are. So it is what it is, but yeah.
Within a quarter, and then we're going to have to get back to the focus on growth. And next year, the street's looking for 11% growth. They're not going to give this on the call, but I suspect tomorrow, analysts are going to probably be bumping that up to about 15%, below where they were pre-pandemic in the mid 20%.
And in the short term, I mean, Meta, when you tack on, analysts are going to have to bring up their numbers now. They're going to likely have to make stock price targets that are much higher than what they're at right now. I mean, I think the stock's going to run to 300 plus, and I think the chances of pullback is very slim. And the reason being is if there is any pullbacks whatsoever in Meta, they're going to be bought up like that because Wall Street money's now recognized like what's going on with Meta, right? Unfortunately, retail's hasn't really, but Wall Street money's they see what's going on here, and so I believe any dips in the stock will be bought up quickly. And I think it's just, a free run to 300 now, and then it'll kind of take a breather, and then, we'll kind of slowly move up to 500, 600 over the next few years.
But that 15% is a stable number. Sleep well at night, and I think we'll get some just generally optimistic commentary about just the strength of the platform that can drive that longer, more stable revenue growth.
Gene, hypothetically, because it's not going to happen, but if they walked away from it, it's $4 billion loss this quarter, which is not insignificant in a quarter that does 20.
Exactly. They're spending over $1 billion a month on Metaverse, right? If they were to ever say we're going to go a separate way, which I think their next product's going to be huge for them, but let's say they decided, we're going to get out of that business. That's over $1 billion of a month, straight to the bottom line. Straight to the bottom line.
$1 billion in revenue off of a base of $340 million of revenues. If they just said, you know what, we gave it a shot, what would the stock be rewarded for that?
I think it would be rewarded some. I actually did the math on it this quarter. They reported 220. If they wouldn't have had Reality Labs, it would have been 340. So they would.
340? Oh my word! They would have done 340 in this quarter. Zuckerberg's got to be extremely confident that the metaverse opportunity is going to pay off in a multi-$100 billion way, because that's extraordinary. I mean, then you can make an argument that 4Q would be EPS $5-6 if you took out, the Reality Labs spend. Oh my gosh!
Beaten there an incremental 55% upside. I think the stock would probably get 20% of that. Some people would be disappointed that they're kind of giving up and they're not as innovative, so they wouldn't get that full benefit. So their multiple would actually come down, I think, if they exited the metaverse. I still think it's the right thing to do. I just published it.
I don't think it would. I think actually, surprisingly enough, and I don't agree with this, but I think their multiple would go up. because I don't believe anybody on Wall Street would be giving this stock a higher valuation right now. They don't want to give it a higher valuation because they're saying you're spending so much money on this opportunity that we don't even believe it. No one on Wall Street believes in the metaverse or the metaverse opportunity. They don't get it. They don't see that, right? So until it actually produces real substantial numbers, they're not going to be on this train. It's not going to happen. So if anything, I think if Meta was to announce something like that, and I don't think it's going to happen because, once again, I believe it's likely going to be a success long term, and I believe Zuckerberg views it. But if they were to announce that, the stock's at 300 in a week, and would command likely PEs of in the 30-ish range at that point in time, because then people would look at it, they would almost view it more in the lens of like a SaaS company. Versus right now, they kind of view it as like this advertising business model, but they're getting into hardware, and hardware you don't have the margins there, and they're spending a lot on that, right? And it also distracts management attention too, right?
Everybody's talking about AI. Don't forget about the metaverse. Apple's going to be entering this space probably in the summer, and I think that we will look back 5 years. It's going to take time, but we will look back 5 years, and I think that there'll be some redemption for Zuckerberg on the topic.
All right, Gene, let us know if you hear anything good on the conference call. Raise your hand. We'll talk to you a little bit later on. Gene Munster. So it's interesting that you mentioned, they would have to change their name.
Metaverse, at the end of the day, when it comes to that product line, Wall Streeters, who's controlling all the money on Wall Street? A bunch of guys in their 50s, 60s, 70s, 80s. Do you think they oh yeah, metaverse, it's going to be huge, man. We're all going to be wearing, glasses in the future and be doing all this stuff. No, of course not. They don't believe in that. They don't see that as the future, okay? So until you put the numbers out, and it's like this and this and this, that's when, why didn't Apple stock just run up thousands of % when Steve Jobs announced the iPhone, right? Because at the end of the day, Wall Street was like, oh, it's a smartphone. What are the margins going to be? What's the long-term profitability? Is this really the wave? Are people just going to want flip phones? It's so expensive compared to flip phones. I don't know why people would get this, right? So they were very, confused about it, and they're like, show us the numbers, right? And Apple over the years showed them the numbers, and then Apple got to command that valuation over time. Same thing with the metaverse. People, those folks, the average fund manager is probably in their 60s. They're not going to see how big the metaverse opportunity is. So right now they're just kind of like, I don't know, maybe it's big, maybe it's not. I don't know. I'm not going to give this company any extra valuation because of this. If anything, I'll take valuation away because it might not work out, right?
Back.
But they have
back.
I kind of feel like they have thrown it out. They have thrown it. They've stopped talking about it, and he was never going to just walk away and acknowledge this. But a year ago, the whole point was if this company just focused on cutting expenses and focused on the cash flow that they generate, it would have a massive rally.
They stopped talking about it because I think Zuckerberg realized he's made a mistake. Not in terms of exploring the metaverse opportunity, but being so public about it and being so in your face about it. Because if there's one thing we learned from Apple, Apple's ingenious about this. They spend silly money, billions and billions and billions of dollars on R&D, right? No one knows what Apple's working on. They don't. They assume they're probably working on the next generation of iPads and the next generation of iPhones and the next generation of MacBooks and blah, 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 right? But they're also working on a bunch of products that they're hopefully going to launch someday, and they might not, right? And so they're always spending this money, but Zuckerberg went the route of we're going to publicly announce what we're working on and all this stuff rather than just keep it on the DL and be like, we're spending this money on some big stuff we're going after. And it's his approach, and it's fine. But I'm just telling you, I think he's learned that let's not talk about it as much. Let's just work on it. Let's perfect the technology. Let's get it ready to rock and roll for prime time, which I think the Quest 3 is going to be massive for this company. But I think that's kind of the approach there. Let's just chill.
Effectively done. They've had different excuses for how they could just focus on expenses. They've had the macro environment. They've had a bunch of different things. No one's needed to push them on the metaverse. I don't think they're going to push themselves on the metaverse. So
that's going to be up, though. If Gene is right, that's going to be up in a quarter, and then they're going to start having to answer for $4 billion in losses each quarter. If let's say that's the same, it actually increased quarter on quarter, right? So let's say it's the same. Is that okay with you?
I think it is okay. It's way down from where it could have been, and the rest of their business is doing a lot better. Mm-hmm. So if you put those things together, and they've been very aggressive on reductions in force. So it's not like they're just giving it lip service. They are, in fact, more efficient. And so yes, I think they can still spend $4 billion.
Is the metaverse AI? Does it have aspects of it? Are they two different things? Do we know that?
I think they are.
So
I think they're different
things. They're two different things, but they could be used probably. There's probably threads that run through each.
Absolutely.
I think you'll probably start getting paid on that, which is, I think, what we're all saying. And if they back out of it, they'll call it the meta reverse.
Oh,
see what I'm saying?
Set that up nicely.
Yeah.
So he asked a question when he really didn't even care what the answer was. We've actually You got me.
Oh, gosh. Okay. Moving on from that one. Let's talk a little Mr. Softy, some other big tech, some opinions here from Josh Brown and others. And why is that Melissa Lee again? Why is she on this show? She never does this show. Halftime report? She's a fast money woman. What in the world?
In Azure growth, Jenny, do you think that
She's working overtime? Holy smokers, that's no joke.
Need to have a re-acceleration, or do we just need sort of stability and sort of...
By the way, that Microsoft quarter, oh my gosh, that was sick. I mean, pretty close to as perfection as you can get. I mean, in this environment, that was amazing. Amazing quarter from Microsoft. Well done.
Stable growth here, because bears will say that
it wasn't quite as good as Chipotle's earnings, but it was pretty dang good.
We are entering a possible recession, be it mild or shallow, whatever you want to call it. We've got layoffs coming still down the pike. That's not a place where we're going to see a reacceleration per se.
I think the problem for me with Microsoft, right, and I don't think I'm the one that you should listen to on it because I'm wrong. I've been wrong the whole time and not owning it. But the problem for me is that it trades at 27 times next year's earnings. So when Joe says they need a reacceleration, they need a reacceleration everywhere because they need significantly strong enough earnings growth, I think, to support such a big multiple. And I don't know where else are they going to get it from? I think, yeah, they do need it. I think this is something where, ask everyone else on the panel. One of the things I've been struggling with a lot is the idea of having an edge, right? Carrie has an edge in Microsoft. You guys have an edge in this. I don't. I look for companies with really high free cash flow yields that are fairly valued. So I look at Microsoft and all I do is say, hey, I've missed it. I've been wrong.
I mean, the forward P is even higher with the gain today. It's 30 or so.
Right.
But that aside, is that the right number?
That really depends on what you have their profitability being over the next 12 months, right? So it's kind of subjective. You could say on average it's a 30, but what if analysts start bringing up their EPS estimates? Then actually you might be paying a 27 right now, or 28, or 26, right?
Do we look at that number and say, the 5-year average forward PE is 35? So should we be concerned, or do we have to just sort of say, we put that 5-year average number aside because that was done in an environment where it was 0% rates. And so there's no comparison. And so 27 is too high in this environment, Josh. What do you think?
So it's tricky because this is the best day for a Microsoft stock, individual day. You have to go back to November 11th of 2022. And that's important to point out because that was really coming off of the lows for most of the giant tech stocks. This is not that. This is not a rebound from something. This stock was already going into the print near highs. This is something else entirely. Now, my personal opinion, the stakes here have been ratcheted up to the point where it's going to be really hard for Microsoft to keep surprising to the upside. To Jenny's point, this is a stock that's now selling at a 20 multiple on EV to EBITDA, to 33 multiple on enterprise value to free cash flow. And yes, you could point out that is in the range of the 3-year median, but it is above the 5 and 10 year. And there's no way to look at the stock and say it's not priced, I don't want to say for perfection, but for just continued upside beats. And can they really deliver that every quarter this?
Microsoft, now keep in mind, this is coming from somebody that doesn't even own Microsoft stock. But I've got to say this for Microsoft stock. This is the perfect stock for this sort of market. Fairly low risk, right? It's like recession, no recession, doesn't matter. Like Microsoft's business is going to continue to chug along. Slower environment, faster environment, doesn't matter, right? So it's somewhat de-risked from that perspective. The multiple's in line with what it's kind of been at in the past, if not a little lower. So it's not like you have some multiple crazy, oh my gosh, it's at some crazy forward P, right? If this is a stock that's at a 60 or 70 forward P, I feel very different about it, right? Being at, I think we're probably at a forward P on this one of 28, 29, something like that. I mean, that's not crazy at all for a business model that's as stable as theirs. And then if you get upside, and let's say things do get better over the next year or two, Microsoft's going to do well in that environment as well. So it's kind of the perfect stock for this market right now. And I think that's why it's traded so well. so many stocks got so heavily damaged, and Microsoft got hit last year, but it didn't get hit the way Meta got hit, or Amazon, or many of these other stocks. It's very, very different the way that one was treated versus others. And I think that's why it's just, in this market, it's pretty much the perfect stock.
So if you're somebody that's on the sidelines, you're not in Microsoft, you're looking for the opportunity, I have to be honest, I don't think today is the day. I think there will be better opportunities to buy the stock as the year progresses. However, you do have to tip your hat to the people that...
It's a dangerous strategy, man. It's a dangerous strategy, hoping, and maybe it's going to be lower. Because in the meantime, this stock might go to 350, then comes down to 325. And you're like, oh, now it's dipped huge. The market dipped huge, right? Now I get in at 325. It's like, well, you could have gotten in at 200 something, but you chose to hope that it goes down.
We're ahead of the curve on this.
Hope's always a dangerous thing in the market.
Have been in the stock. I am not one of them. I own it, I guess, through the triple Qs, but I am one of those people on the dock waving as it goes away. There are a lot of other tech stocks that look great right now. The SMH is having a great day. Anything that has to do with AI is going up a lot today based on Microsoft and Alphabet's comments. But this is really a spectacular move for a very large market cap company.
We go back, though, to the idea of it being...
One of the things we do in the private group quite a bit is we'll run projections and go through different projection scenarios for stocks. And I have different projections for stocks out there, Tesla projections and Amazon and many different stocks. And I go through a super bearish case, a bearish case, kind of like a base case, right? A super bullish case and a bullish case and a super bullish case. And through those 5 scenarios, I can kind of figure out, is a stock trading at a good value or not, right? And that's something that you've got to be able to do with companies that you're thinking about owning or you do own, is run through these different scenarios and go through it and be like, am I getting a good deal? And so with a Mr. Softy, you got to be able to run your projections, put together your model here and say, you know what? Mr. Softy's at a very fair value. I got to start adding shares to this. And if it goes down, I'll buy more. And if it goes to this price, I'll buy even more, right? And if it goes up, great. What am I going to stop buying it at? But that's how you really run this game. To just hope, oh, maybe it'll go lower. It's not a good strategy. That's all I'm going to say about that. It's not a good strategy. You've got to. Absolutely gotta be able to run projections and say, I feel confident about buying this stock here because it's at this valuation, and I believe it's going to go to this valuation because this is where I think their net income's going over the next few years based upon my different scenarios I've ran here. It's very, very important.
And maybe it's because Microsoft said that AI services will be a 1% growth to Azure revenue growth. Carrie, are we factoring that in? Not to mention the efficiencies that Microsoft could derive from just implementing AI within its corporation.
So we're looking at, obviously, a company that's on the verge of an acceleration. Mm-hmm. And the bulls would say, yes, Microsoft is the way to play AI safely because you have a lot of other earnings going on underneath it. And the bears would say, hey, wait a minute, it's too expensive. Why would you pay so much? And it's not a pure play in AI, and that's 10 years off or however many years off. I would say, take a look at the chart. This stock has climbed a wall of worry. This stock it's like the S&P or like the NASDAQ. It bottomed at the end of 2022, and it's really had a beautiful move higher if you're a technician, because it's had, kind of the higher lows and higher highs, and we're on a little spike here. So I understand people being reticent to stepping up and buying it here. We bought some a few months ago, more. It's a big position. Almost no one is overweight Microsoft.
I tell you something. I think you just said something really important. We're going to have a full-blown AI bubble this year. There's no doubt about it. In the second half, as the IPO calendar comes back, you're going to see all sorts of things going public that are using the word AI, if not in the name of the company, then somewhere just below on the S1.
So interesting thoughts from Josh Brown there, okay? So that's interesting. If Josh Brown's confident about the IPO calendar rolling around, right, in terms of a lot of IPOs in the back half of this year, if you are of that thought process, then you believe the stock market's going to be strong. You can't be bearish on the stock market, believe the stock market's going to go down a bunch, and be bullish that there's going to be a bunch of companies go public. Companies are only going to go public if the stock market's in a good place and there's an appetite. Why has there not been crap for IPOs for the last 12 to 18 months? It's because there has been no appetite for that, right? And so when it comes to, C3 AI, because he was mentioning about there's going to be, all these AI companies going public, we're going to have an AI bubble and whatnot. And, you look at something like C3 AI, and this one's been, obviously kind of trending down now. So I think that one's just a good stock to kind of keep an eye on to see if we're actually going to have any bubblish activity in regards to kind of the AI space and whatnot there. So anyways, guys, I appreciate you joining me as always. Thanks so much for being subscribed. Thanks so much for being here. Glad you guys enjoy the channel. Also, if you're looking to join us in the Patreon, get in that $10 tier ASAP, because that will be going away. So if you want to see the moves I'm making in the market, buys and sells and all that good stuff, and support the channel, that'll be pinned comment down there. And then after that, it's only be the $19 tier. But anybody that's grandfathered for the $10 tier will be able to keep that in there. Appreciate everybody. Much love as always, and have a great day.